Hey gang, I'm in sunny San Diego with my wife and my kids, and I'm here on vacation. We're gonna hit the zoo, Legoland, and SeaWorld. And you know what makes it possible for me to be here? The fact that I'm an independent trader. I could trade from anywhere in the world. We closed out a 28% pullback trade last week, and we're in one right now that's up over 14%. And in today's session, I'm gonna teach you exactly how to pick the same type of pullback trades step by step. Low risk, high opportunity profit potential. Let's step into the lab right now and get it done. All right, we're back in the lab, and today we're going to talk about finding high probability, low risk trade opportunities with Bollinger Bands. Now, let me explain to you where we're going here. The biggest problem the traders have with pullbacks is finding the nexus between the long-term trend and the short-term trend. That nexus gives you the lowest risk opportunities, okay? So instead of doing visual analysis, which can be very subjective, I decided to make it mechanical. So what the Bollinger Band will do for you is find you a low risk pullback, okay? It'll find you the nexus, that nexus that I'm talking about. You could see it here on the chart actually. So whenever price action trades below the Bollinger Band, and this is a 10-period Bollinger Band, I'll get into that in a bit, this will identify low risk entry opportunities as long as you have a bullish main trend, okay? So it works the same way to the downside. When price action penetrates the upper band, it gives you a low risk opportunity, and it's also the exact moment that the long-term trend connects with the short-term trend. That's the benefit of the Bollinger Band. It'll help you find it without you having to look at charts manually, okay? And again, you can use this for the long side, and you can use this for the short side. And this is a very low risk, high probability type of setup, okay? This is what I was talking about earlier. The only change that you need to make to the Bollinger Band is change the setting from 14 days to 10 days. And the reason we do that is because this is short-term swing trading. And the Bollinger Band was originally designed for position trading, where positions can last for several weeks or even months, okay? We're not position trading. We're not holding trades for months and months. So therefore, we need the Bollinger Band to be a bit more reactive. And that's what we get when we change the period from 14 days to 10 days. This is easy stuff, right? No wonder Bollinger Bands are so popular. Now stay with me here, because at the end of this lesson, I'll share information about some other ways you can get into the markets with low risk and invalidate trades that are losing quickly. These are skills you can gain that 99% of other everyday traders out there just don't have. So listen closely and take advantage of what I have in store for you today. But before I get ahead of myself, let's finish up this talk about Bollinger Bands. So remember when I first started talking about this, I explained that you need a strong long-term trend and you need a pullback. And the Bollinger Band finds the pullback. But in order to find a long-term trend, a strong long-term trend, you want to look at the stock. You want to find what stock the sector's in. And then you want to make sure that that sector is trading above the 200-day moving average. That's very important. So in this example, the utility sector is very bullish. It's near all-time highs actually, and it's trading clearly above the 200-day moving average. So this gives us the green light to trade stocks within the utility sector using the Bollinger Band as a pullback. And in this example, this is a stock that's in the utility sector. This is Duke Energy. And we use the Bollinger Band entry zone. We picked the entry exactly as I explained. The price deviated and traded below the Bollinger Band. And the trade made a very quick profit. It was out in just a few days. It made a 36.84% gain on the option, and the stock itself made a 4.02% gain. So it's a very low risk setup because it tells you if you're wrong right away. If the price breaks your previous low and doesn't head higher, you know that the trade may be a reversal or may just fizzle out and it's not a true pullback, okay? Same example to the short side. We're looking at the energy sector. It's trading below the 200-day moving average. That means the long-term trend in the energy sector is bearish. We look at stocks. In this example, we have Occidental Petroleum. We saw a high probability pullback on this stock when it broke above the Bollinger Band. We went short, and a few days later, we got a gain of 71.68% on the option, and that's very impressive considering the position was only held a few weeks. Okay, gang, that's it for today's Bollinger Bands lesson.
It's a must-have for every trader's toolbox, so keep it handy. Still eager for more strategy? Then listen carefully, because you don't want to miss this. Some of you have asked me for more pullback trade ideas, and I'm thrilled to hear it. Why? Because very few traders know how to properly play this phenomena, and even fewer can spot it at work in stocks before explosive moves happen. But I can show you how it works before the next event strikes. Click the button below this video for details on my next free pullback class and how to learn exactly which trades to enter, when to start buying, and how to stay nimble in this ever-changing market. Whether it's up, down, or sideways, you'll always be in control. Sign up now below this video to learn what most traders will never know and how to grow your account balance to prove it. This class will fill up quickly, so reserve your spot now. I'll see you there.